Good morning, everybody. It's Chris here from Serene Education with the 4 majors analysis update for the 3rd of October 2012. Hi, guys. Let's have a look at the daily to see what's been happening. I'm just going to concentrate on the daily, primarily because there's still a lot of hesitation on the 4 majors in particular. Price, like Euro, for example, you can see quite clearly here, we've gone to a 5th consecutive day now of no real true direction. The only good thing over here at the moment is the CTC has given us that systems are still all looking potentially positive. Why? Because you can see just recently we had a nice break of the institution moving average, and this break in trading above the institution moving average on our daily has been the first occasion price has been trading above the institution for the first time in a full year. Look back to the same time last year, you'll notice that the price had actually broken just through that time frame. Now, near term, you can see prices trading below it. Yes, we've had a pullback from these highs here, roughly around the 13,200 mark. Price is consolidated, but it's consolidating now at the upper side of the 200 period moving average. Okay, it's a lot of wicks, a lot of indecision, very small bodies, and a lot of wicks. Okay, we're trading sideways between 12, what would you say, 12,800 and 1295. Not really going, or 1290, not really going anywhere very quickly. And if this is to still remain positive sentiment, i.e. trend direction wise, we do need to see a bullish engulfing candle very soon to confirm that. And that's what we want. Okay, we don't want to trade speculative trading, we don't want to trade consolidation, we want to trade decisiveness. Okay, so if you are trading this, tight stops, guys, because you're going to see a lot of volatility, which is going to really play havoc on your entries. Here again, if you're looking for the bigger time frame, chaps, if you want to, in my case, not trading at the moment now because I don't clearly have any sentiment behind this move at the moment now. It's consolidative, positive consolidation nonetheless, because we're still above the institution. We still need to look for potentially upside movement to actually favor here. However, if we do get a bearish engulfing candle and a break below 12,800, then I'll be looking for bearish consolidation for the foreseeable future, and we should be targeting the downside. And if that was the case, then we should look at our Fib retracement areas from the low here we saw not too long ago here in July, all the way to the high we had currently in September, and you can see the 23.6 is playing in play as we speak now at this level just above 12,900. We have the 38.2 Fib retracement area below the around the 1275, which would be below the institution moving average. Okay, so we have a bearish engulfing candle closing lower than 12,800. Then we should be targeting that 38.2 Fib before we see a consolidated bounce potentially, before we see any further movement to the downside. So what we want now clearly is a decision candle. End of week, first week of a new month, non-farm payroll is expected this Friday, guys. That's the reason potentially what we're going to see the catalyst coming from. We want to see or something happening that's going to start the momentum, whether it be upside because everything's still looking positive at the moment now, or whether it be a change and the start of a new trend, which would be, if we see a break below 12,800, a negative trend starts. And if you see where we come from on our bigger time frames, you can see that over a period of time we are still making lower lows. The over a major trend up until recently has just been tested and seen a major pullback. Or will this be the start of another move to the downside? Major pullbacks recently, however, could we see price reverting to the downside? There's a lot of issues at the moment now with Spain. Talk that there's potentially going to be a bailout proposal moving forward, and there's still issues with Greece, still dragging their feet on putting together a yes on the requirements they need to do, put forward by the EU, the TOCRA, regarding their next bailout payout. They're dragging their feet again, and looks like it's going to go to the last moment again. The left wing and the right wing are pretty much tossing it out, saying no, we don't want to pay that, yes, they want to do that, etc. But nonetheless, it is causing huge issues, okay? And I think the underlying sentiment at the moment now, a lot of people are focusing on Europe as a whole and wanting to know what's going to happen. Spain, a lot of analysts out there are worried that they're actually dragging their feet in terms of coming forward with saying, listen, yeah, we do need bailout. We need to have some help from the TOCRA. That is looking at the moment now. It's looking very negative sentiment wise. People are worried about it, and hence the reason why our price is just not going anywhere very, very quickly. So got to see that confirmation signal very, very soon. Sterling here, still looking at that cap to the upside. Here at 16,300, major resistance level in the past, and it's come back to haunt us yet again over here. Clear resistance, exhaustion as we head into this resistance area here. A nice exhaustion candle followed by bearish engulfing after a potential move to the upside. That was taken away straight away with this tweezer top and price has fallen away over the past couple of days. Yesterday's candle in particular, very negative, a lot of movement to the upside. However, by the end of the US session, pretty much taking all that momentum back and closing very, very indecisive. And what we see now is price moving to the downside. Ideally, I've taken the all-time low that we saw at the end of May to the current high that we saw in September, and you can see the Fib retracement here sitting above 1605. That would potentially be our near-term target. Get below that, and then we should be targeting the 50-period moving average, which would take us back towards that 5900 mark, which is the 38.2 Fib retracement. 50% will take us back to the institution. Near term, you can see that the trend still very much in play. However, you can see the trend line now is coming into play. Okay, very, very important. Prices now, you can see a lot of swing high, swing high, swing high, swing high, swing high, really moving with a lot of momentum through the early parts of September. A nice 70-degree angle to the upside. However, being capped by that 16300, prices move sideways, and now we're seeing price trading below the supportive area here at 23.6, just below the 1700. Prices now pulled back, resistance, and now we've seen price moving to the downside. So that's a breakout pullback and continuation lower. Now we're trading into a very strong potential resistance level, and also the Fib retracement area here at the 1605 mark. So I think see consolidation here again. It remains to be seen. Issues with Europe at the moment, underlying issues at the moment, and which is going to be on everybody's minds at the moment now. But we are going to non-farm payroll in this week. We have all important interest rates announcements tomorrow from for the Bank of England. It's very, very important that we got those official bank rate statements tomorrow. Are we going to see a change from 0.5 lower? IMF has been pushing for it for a number of months now. They seem to think that if the Bank of England can actually drop the interest rates, it would help the European sector. Why would they want to do that? They're looking after their own good. However, they want them to do their bits in trying to keep things happening or happy in Europe in terms of growth. So we have a lot of news out tomorrow. In particular, today we have service PMI results for sterling. German bank holiday today, so not a lot of liquidity potentially in the Europe trading zone. So at the moment now, consolidative. We want to see some true momentum. You can see a lot of momentum this evening from the Asian session moving lower, which constitutes this consolidative range at the top here being broken. Ideally, looking at potentially this trend line and the 1605 as our consolidative area for the time being until the end of this week. US dollar Swiss franc, let's have a look at this particular pair. Also, like its European counterpart, pretty much consolidating at the moment, but in this case at the underside of an institution moving average. For the first time now, the US dollar is actually trading lower than the institution moving average in a full year, and you can see the CTC has pretty much complemented that downside movement. Nice trade to the downside on this particular pair, and the CTC are really working magic over the past couple of months on this particular pair. So now we're seeing consolidation at the underside of the institution moving average. Price is being capped now by this, and we're not seeing any clear direction. First week of a new month, non-farm payroll and US dollar Swiss franc will be heavily tied into that. Also, the issues out in Europe. So we want to see clear direction. If you're not trading this, rather bide your time, rather stand away, rather step aside and wait for that confirmation candle, which might potentially rear its head by the end of this week. If not, we're still consolidating on the institution moving average. We do need to see a confirmation candle, and if you're looking to trade this, you could potentially be going nowhere very, very quickly because price has just not got any clear direction. And if it's got no clear direction, candlesticks will completely show you that sentiment, and it's in the shape of very indecisive bars with a lot of wick on either side. Clear indecisiveness from the market. We only want to trade clear direction. So got to be very, very patient here in this case. Rather bide your time, rather wait for a clear direction, and then we'll trade it. So on this particular pair, not much to talk about because there's just no sentiment at the moment, and we want to see where that draft's going to come from. So we want to see a bullish or bearish candle, and then we come back and have a look at it. US dollar Japanese yen, what's happening with this particular pair? Not much, just going sideways very, very quickly. A lot of consolidation at the upper side of 78, which happened to be prior resistance last year. You can see if I just pull back, there's a lot of uncertainty last year for this particular pair, just ranging since August right through to February of this year. However, near term, you can see price has been pulling back and moving to the downside and using the 78 as a clear resistance support area near term. Momentum is still looking negative as this. You can see the histograms are still pointing south. a lot of negativity and red in color. One or two areas of blue. However, trade not really moving with a lot of momentum after that news announcement. Well, not the news announcement in particular, but that actual movement. Here. So here blue, for example, but indecision candle at the end of price support and resistance level. Here another one, breakout, blue across the board. However, not really getting that buying sentiment candle once the actual price has been broken, or the institution in this case. So sentiment still looking negative long term. Swing lows are still in play, and we're being squeezed now between these lower swings into this major support over here at 78. One or two areas where we've seen price breaking lower. Feds coming to the forefront over here and saving the US dollar, as we saw a nice genuine break below this pair here in early September. Quantitative easing 3, printing presses at the ready for the Fed, and we saw price knee-jerk reaction to the upside, but going into a price support and resistance level, we saw this evening star formation and prices falling back to the downside again. However, just recently, price getting back above 78. So here again, very indecisive, but still making swing lows, which still constitutes to negative sentiment. And we're going into non-farm payroll this Friday. So this could be quite detrimental to price, and we do need to see some sort of direction. This backwards and forwards is not doing anybody any good, and we want to see a clear drive. So in my case, I still haven't traded this particular pair primarily because we just haven't seen any clear direction. And if one or two things are going to happen, we need to see a nice bearish engulfing candle. Yes, a nice long wick to the downside, or a nice bull wick to the upside. Ideally, any further upside or potential support or long-term trades to the upside would need to see price trading above the institution. Otherwise, it'll just move higher into the institution moving average and pull back again. We do need to see clear direction. So in this case, like it's other major pair, the other pairs, there's just no true direction. And when you're seeing this, it's seeing a lot of backwards and forwards, a lot of speculative trading, and this all wavers on risk appetite at the moment. So got to be well aware of it. And if you're not in this particular trade, then don't look to trade it until Monday, to be honest with you. Rather have yourself a nice long weekend. Let's see what happens next week after the non-farm payroll. Okay, so that's it for today, guys. Hope you had a fantastic trading day for the remainder of this week. If you're not trading this particular pair, please be advised to look at your news announcements, see what the fundamental side is. We do have non-farm payroll figures coming out this Friday. However, tomorrow in particular, we have a lot of data out. Also, the ADP unemployment figures, which come out prior to the non-farm payroll figures. We also have all the interest rates announcements tomorrow, which also is going to factor in. However, the underlying sentiment at the moment now is looking at Europe. Why Europe? Because we're still having issues with Greece, and we still have a big problem potentially with Spain. We want to see what happens with those particular ones near term, and then we should get clear direction of where price is likely to go to long term. So that's it from me today. Hope you have a fantastic trading day. Please keep it simple. Manage your trades with sound money management, and you will not falter. Okay, I'll see you first thing tomorrow morning. Until then, trade serenely.